The U.S. House passes a bill to raise the U.S. debt ceiling only days before the government estimated to run out of money to pay the bills. Stocks fall in last night's session as job openings rise in May, giving way to some fall in the markets as well. This also talks about the fears that there were around the debt ceiling as well. Asian markets trade mixed after the U.S. House passed the debt ceiling bill. The SGX Nifty 2 is signaling a lower start for the Indian markets. Oil prices dip on a larger than expected build-up on U.S. stockpiles and fears of weak Chinese demand. Brent crude falls to $72 a barrel on a stronger dollar, also weighs on prices. India's GDP growth in FY23 slows to 7.2% but beats estimates. A faster than expected 6.1% growth in quarter 4 takes the full year GDP growth above the government's advanced estimate of 7%. TCS veteran and former head of the BFSI vertical K. Krithivasan takes over as TCS CEO as Rajesh Gopinathan steps down. While no strategy changes are expected, the key ask from the new CEO will be to outperform peer emphasis on growth. Good morning. Welcome to Power Breakfast. You're tuned into CNBC TV 18. I'm Sonal Bhutra. Well, the big breaking news, of course, is the debt ceiling proposal has been passed, and that is way before the deadline as well. So ahead of which US markets were lower, but that has just come by, and that's the big news. But first up, as always, let's take a look at what the Asian markets are doing. They were largely mixed, so to say. We have the Straits Times, which is in the green, but other than that, it's largely in the red. Hang Seng, after falling almost 2% in yesterday's trading session, is seeing some gains of around 45 points. We have the Taiwanese index lower in trade by 61 points. Shanghai is lower. We also have the Nikkei, which is trading in the green. So it's a mixed picture. And once that debt ceiling proposal has been passed, we are seeing some recovery from the lows for the Asian markets as well. And let's talk about that one, because the much-awaited debt ceiling deal is passed in the U.S. House test. The House of Representatives greenlights the debt ceiling bill with majority support, even as several conservatives hold their ground in the face of a historic default. The U.S. House votes 314 to 117 to send the bill to the Senate. The bill must now reach the White House before the June 5 deadline, when the Treasury is expected to run out of funds to pay its bills. The passage of the bill comes as a massive relief for global markets, which were on edge due to the possibility of a default in the world's largest economy. In fact, let's listen into what the U.S. House Speaker Kevin McCarthy had to say after the bill was passed.
I've been thinking about this day before my vote for Speaker, because I knew the debt ceiling was coming. I wanted to make history. I wanted to do something no other Congress has done, that we would literally turn the ship, that for the first time in quite some time we'd spend less than we spent the year before. Tonight, we all made history, because this is the biggest cut and savings this Congress has ever voted for. And it's not that we're just voting for it. This is going to be law. $2.1 trillion.
Okay, all right. And ahead of the vote, of course, U.S. markets are on edge and ended Wednesday's trading session low, with the Dow Jones losing over 130 points, the S&P 500 down 25, and the Nasdaq Composite closing with 82-point cut. The indices closed May on a mixed note. The Nasdaq finished 6% higher. The S&P 500 added nearly 0.3%, while Dow Jones fell over 3%. The latest job openings and labor turnover survey shows job openings unexpectedly rising in the month of May, beating the April number and street expectations as well. Okay, we have big cues to track, the debt ceiling being the biggest one. That's the global market action. Let's talk about how these cues will impact our own markets. We have our research team joining in to tell you just that. What's the trade setup looking like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Let me go across to you first up, Ekta. The big news has come by. What are the other market cues we are watching out for?
Thanks for that. Well, yes, the big news is that the US House has passed the debt ceiling. The US futures have recovered as we speak, and Asia is mostly higher at this point in time, possibly reacting to that relief which has come through. SGX still indicating a bit of a soft start. Now for yesterday, the markets did snap their 4-day winning streak ahead of the GDP data. There was a decline that we saw in financials. One of the other reasons because of that, one was the uncertainty from the US with regards to the debt ceiling, but the other one was the China manufacturing activity, which contracted faster than expected with the PMI at 48.8 versus 49.2 in April. However, on a larger picture, the momentum seems to be intact for our markets as FIIs continue to buy. The GDP data was better than expectations. So FIIs have bought for the 9th session consecutively. It is probably some of the highest buy figures that we've seen in the past couple of weeks. FIIs net bought around 3,405 crores. DIIs net sold around 2,500 odd crores. Now Q4 FY23 GDP better than expectations at 6.1%. Our poll was 5.1% for Q4. For FY23, we've closed the year better than RBI estimates at 7.2%. Even the A8 core industries data, which is basically the core data for the month of April, was at 3.5%. Flattish on a month-on-month basis, and the fiscal deficit, we've met that for FY23 at 6.4%. Now, the macros seem okay, and talking about the macros, one additional point will probably be crude oil, which is better on Chinese data, weak Chinese data, stronger dollar as well. So Brent crude, the last time I checked, was between $72 to $73 per barrel. So with the debt ceiling out of the way, the markets will now concentrate on the jobs report. The May non-farm payrolls data will be out on Friday. So that's probably going to determine the Fed's trajectory going forward. And that's going to be the next cue to watch out for.
Okay, that's a lot of global cues, and of course they'll impact our markets as well. Thank you, Ekta, for that. Let's talk about some stocks that will be in focus today. Surbhi is joining us with that list. Surbhi.
So I have a few stocks on my radar. The first one is Coal India. The government plans to sell 3% stake via an offer for sale. The floor price for this offer for sale is pegged at 225 rupees per share. Next is Laurus Labs. The company acquires additional 7% stake in immuno-adaptive cell therapy for 80 crores. With this, their stake will increase to 34%. South Indian Bank, the board approved the panel of candidates for the position of MD and CEO, and this will be now sent to RBI for approval. MOIL, the company increases prices for some of their manganese ore grades by 10%. Rainbow Children Medicare, the company appointed Vikas Maheshwari as the CFO following the resignation of R. Gauri Sangar effective 1st of June, that is today. And apart from this, auto companies will be in focus as their monthly sales data is out today.
Okay, all right. That's a lot of stocks in focus. All right. Thank you, Surbhi, for that. Let's talk about the F&O space. Nigel is joining us with all the update from there. Hey, Nigel, morning.
Well, morning, Sonal. Yesterday we had a bit of a down day, but it appears the key reason out there was unwinding of long positions, because both on the Nifty as well as the Nifty Bank, the Nifty more, there was some unwinding of positions close to 6.5% of the total open interest was surge. What did the FIs do in the F&O market? Well, they unwound long positions. Close to 18,000 contracts were unbound from the FIs, and they added some mild short positioning. Keep in mind, they continue to remain net long on the index with around 54% of their positioning, but at least you're getting some shorts in the system. It always is good when there are some shorts in the system in case they get trapped on the wrong side. For the time being, we're enjoying the big institutional flows, but you like some shorts in the system. On the buying side, they bought both calls as well as puts in yesterday's trading session. But what's telling you that at higher levels, you're going to see some resistance is the way they're writing calls. More than 1.5 lakh call contracts were written out there, telling you that the bears, they're going to come in to fight at around that 18,600, 18,650 odd. Now, we made this point a couple of sessions ago that the PCR had moved to the upper end of the band. Good to see that it's come sub 1. Remember, normally bottoms out at around 0.7. So as we speak, it's in the midway mark on the PCR. What caused this? Well, yesterday there was call writing, as I said. More than a crore shares at around 18,600, 18,500 call. Aggressive writing being seen out there. And on the downside, the 18,500 put as well did see some writing. So you plug the numbers out there. Look at the 18,500 put. The rough premium yesterday was around 50 rupees. So you're getting a bit of a support zone. On the upside, resistance comes in at around 18,650 odd. The Nifty Bank, that's going to be important. The 44,200 call was very active yesterday, which gives you a broad sense that yesterday we bounced off the lows. So that becomes important at around 43,800. That 43,700, 43,800 mark becomes important because the 20 DMA in yesterday's low comes in at that mark. SGX Nifty is suggesting a pullback of around 60 points odd. I think now 50 points. If you get a little bigger pullback, then maybe keeping 18,450 on the Nifty as a stop loss, maybe risk reward could favor you. Expiry day, so anything can happen. Back to you.
Okay, anything can happen Thursdays, right? Thank you, Nigel, Surbi and Ekta for joining us and prepping us up for this trading day ahead. It's time to slip into a short break. When we return, 7.2% in FY23, 6.1% in fourth quarter. This is the GDP growth data. We'll get you more analysis on the other side. Stay tuned.
Yes, it's okay for us to nod for everything. Because we are parrots. Yes, but your wealth manager? Shouldn't be doing that. You know?
Choose Nuvama. We only do what's right for you and your money. Nuvama. Let's do it right.
What does your investment portfolio look like without gold? Incomplete. Because as a gold owner, you have the power to make bold decisions. To balance risks and returns. The power to buy and sell, right at your fingertips. Making gold your strategic advantage.
Without which your portfolio is incomplete.
Power your portfolio with gold. World Gold Council.
नई कार खरीदने से पहले एको चेक करें और 36,000 तक बचाएं।
Welcome back. You're still watching Power Breakfast on CNBC TV 18. India's largest software company, TCS, gets a new CEO. TCS lifer K. Krithivasan takes over at the helm from today as Rajesh Gopinathan steps down from the post. Reema Tendulkar is here to tell us more about the new CEO and what will be expected from him.
TCS today welcomes its new CEO and MD, K. Krithivasan, the company's fifth CEO since it was set up in 1968. In fact, the company has had only 5 CEOs, and that shows it's a stable ship. It's a testimony to the stability and quality of its management. K. Krithivasan is a TCS veteran. You could call him a lifer, just like his predecessors. He joined in 1989. He's been with the company now for 34 years. During his long tenure at TCS, he's held various leadership roles in delivery, customer relationship, management, large program management, and sales. Prior to his elevation as CEO MD, he was the president and global head of the financial and insurance vertical, the BFSI vertical, which contributes about 32% to TCS's revenues and is the largest sectoral contribution. Now, Krithi holds a bachelor's degree in mechanical engineering from the University of Madras and a master's degree in industrial and management engineering from IIT Kanpur. Now, the question everyone's asking is, does the change of guard at TCS mean a change of strategy? And here, I would like to refer to what Krithi had to tell us in the Q4 earnings call. Leadership change doesn't mean a strategy change. All of us have been working with this organization for so many years, and all of us have a good understanding. Whatever strategy Rajesh put in place was also a collective leadership decision on how we want to go forward. So I don't expect a drastic strategy change. We will be tweaking on what we need to do based on the market situation. Now, the other question everyone's going to be asking him, what is the key ask from him? And here I suspect it will be to grow faster than its peer, faster than the industry. There is no doubt that under Mr. Gopinathan, the prior CEO, TCS has delivered a strong financial performance. The company has delivered a rupee revenue growth of about 11.5%, a constant currency revenue growth of about 8 to 9% over the last 6 years. But its peer, Infosys, has grown faster than TCS over the last 4 years. That said, TCS continues to maintain its margin supremacy over the industry and all its peers.
Okay, Reema, thank you so much for beautifully explaining what it would mean for TCS with the incoming CEO from today itself. So that's about TCS, but let's now move on to an important voice from the corporate world. On the sidelines of the Vedanta Town Hall held last afternoon in New Delhi, my colleague Nigel D'Souza exclusively spoke to the company's chairman Anil Agrawal on India's ability to produce semiconductors and the debt reduction plans going forward. Let's listen in.
Semiconductors, these are the very technical. We are very comfortable, and this question will come and go, and whether 29 or 30 or 20, we are fully equipped. We have a David Reed, who is the pioneer of making semiconductors. He is hiring 400 people to make this happen. We have already selected the site of Gujarat, and government is with us shoulder to shoulder. I don't even think that how the payment will be made, because we have a cash flow and this payment will be made. So as far as our debt equity ratio is very comfortable, our banks, lenders, everybody is very, very comfortable. My dream, my vision is, in few years, I will have a zero debt company.
Okay, all right. We'll, of course, keep getting excerpts of that exclusive conversation through the course of the day. Let's now get tracking to India's growth. India's GDP growth in FY23 slowed to 7.2% but beats estimates. A faster than expected 6.1% growth in Q4 took the full year GDP growth above the government's advanced estimate of 7%. Lata Venkatesh is here to decode the numbers.
Yes, that's right. This is a huge positive surprise in terms of the fourth quarter number. The GDP number coming in for the fourth quarter at 6.1 against a CNBC TV18 poll of 5.1. I have seen positive surprises in my time, but a 1 percentage point increase, which means 20% more than what the street was expecting, is a first. This is hugely better than what the street was expecting. The GVA, incidentally, is 6.5%. Means it's even better than the GDP, which could be a little negative because GVA plus taxes minus subsidies is GDP. It looks like much less subsidies have been given, and that's why the GDP has not grown as much as the GVA has. But the star performers are actually, it's an all-star team. Agriculture has done very well with 5.5%. Manufacturing has done reasonably well at 4.5%. Many people were expecting 1% or less. But the big performer has actually been construction, coming in at 10.4%, and trade, hotels, transport and communication. It's a large sector, the largest contributor to GDP. It's largely MSMEs and the small sector. That's grown at 9.1%. Very good, very heartwarming because this sector was maimed the most during COVID, and the rest financial sector 7.1%, nothing much coming from public administration. So, excellent quarterly performance, and because of that, the full year performance, instead of the 7% that everyone was expecting, and our poll threw up, it's coming in at 7.2%. Now, let me look at the small things that did not work very well, and that is GDP looked at from the expenditure side. Personal final consumption expenditure grew by only 2.8%, which is bad. You want more consumption for the multiplier effect. And that's a little sad. Government consumption also was low, like we told you, when subsidies were lower. So that's come in at only 2.3% higher for the fourth quarter, I mean. But capital formation has come in very well at almost 9%, 8.9%. So that's a big contributor. And the fourth big contributor is net exports. That is, you deduct imports from exports. Normally, it's a big drag because we import much more than we export. But this time, it's hardly a drag, because our services exports have done very well and imports have done not so well, probably because we had some slowdown. The economy was not chugging along very well, and therefore net exports is also not a drag. All this has contributed to a GDP growth of 6.1%. Consequence, we should expect economists to start probably revising the FY24 current year forecasts a little higher. All told, very good numbers.
Lata, thank you so much for making sense of these GDP numbers, important data that we got. With that, we'll move on. The government also released its provisional statement of accounts for FY23. It has met the fiscal deficit target of 6.4%. Sapna Das is here with the details. Sapna.
Well, naturally, this is very much expected lines. The government was extremely clear that they will be able to stick to the FY23 6.4% fiscal deficit number. But having said that, probably some of the data points, point towards maybe better fiscal management. So, primarily, if you look at your revenue deficit numbers, they are much lower than what was budgeted. You look at your overall revenue expenditure, that is also trending down a bit, and your primary deficit is also lower than what was anticipated. Your interest payments are lower than what was anticipated, and hence your overall fiscal deficit in actually absolute terms is lower than what the government had anticipated, and this is all as of March end. So this probably is pointing towards better fiscal management. Also, in terms of your revenue side, your tax aim, it's at 100.5% of the budget. It appears that it has just met the aim, but yes, let's also keep in mind that the FY23 tax revenue targets were actually increased at the time of the budget on Feb 1. So to that extent, that is something that is noteworthy. I think one of the most important points also that has emerged is, apart from the lower interest payments on government borrowings, because that has been a big talking point so far. Apart from that, I think the government exceeding its capex target, 101% of the budget, I think that is also very noteworthy. They have a higher budget for this year, and most likely, I think if the GDP numbers are going to be what is as expected, then maybe that pace of capex, at least in the part of the government, is likely to continue. This is showing better fiscal management, all said and done.
Sapna, thank you so much. Those are other important numbers to track. We'll slip into a break now. Up next, we'll get you all the cues from the commodities market. Stay tuned for that.
I am slow. I'm a tortoise. But your wealth managers, they shouldn't be as slow, you know?
Choose Nuvama. We move at the right pace because we only do what's right for you and your money. Nuvama. Let's do it right.
दुनिया में कुछ लोग कहते हैं और कुछ लोग करते हैं. जब कहा गया देश में सोलर पावर सफल नहीं हो सकता, तो हमने सुना नहीं, उसे सफल कर दिखाया. कहा देश का सबसे बड़ा पावर प्लांट बनाना इम्पॉसिबल, तो हमने पॉसिबल कर दिया. बोला कोने कोने तक बिजली पहुंचाना किसी के बस की बात नहीं, हमने पहुंचा दी. सवाल उठे एनवायरमेंट फ्रेंडली गैस सब तक कैसे पहुंचेगी, हमने वो भी पहुंचा दी. कहा तो ये भी गया पैकेज फूड बिजनेस हमसे नहीं हो पाएगा, लेकिन हमने कर दिखाया. बातें उठी सीमेंट सेक्टर में हम कभी स्ट्रांग नहीं बन सकते, तो हमने सुना नहीं, बन के दिखाया. चर्चा हुई देश में इतना बड़ा पोर्ट बनाना असंभव, हमने संभव कर दिखाया. और जब कहा गया देश के एयरपोर्ट्स इंटरनेशनल स्टैंडर्ड्स के नहीं हो सकते, तब भी हमने सुना नहीं, कर दिए. मुश्किलों की नहीं सुनते, हम करके दिखाते हैं. अदानी, हम करके दिखाते हैं.
Welcome back. Well, big moves in the crude oil prices. So let's get in Manisha Gupta with a lowdown of what's happening in the commodity space. Good morning, Manisha.
Thank you for that, Pavitra. Well, the U.S. debt ceiling passing the House vote is a positive. So whatever declines that we saw yesterday, the markets have seen a bit of a positive move coming in right now. The crude oil prices, though, are still trading at a 4-week lows. We've seen 10% of decline for the month of May. June 1st has started slightly on a positive note, and that is also because of the vote on the ceiling here. But there are still concerns on demand slowdown in China. The U.S. crude inventories have continued to rise. The U.S. oil production also is at near record highs, and that would continue to weigh onto the markets. We are now looking at the 4th June OPEC and allies meeting. That would give you further direction for the crude oil prices. But after opening really on the weaker side, and after we've seen the U.S. vote go through, the China CAIC-SIN PMI numbers also have come in positive for the month of May, and that seems to be supporting many of these base metal prices also. We have seen real weak manufacturing data from US and UK, so some support from China has led to a small bit of buying right now in Asia.
Okay, all right. Thank you, Manisha, for making sense of the crude oil price move. So we have seen some recovery now in crude oil. With that, we'll do one thing. Take your leave on this edition of Power Breakfast with the news that the SGX Nifty is indicating that the start for our own markets will be in the red yet again. A 50-point downtick is what the SGX Nifty is indicating. Stay tuned. Bazaar Morning Call comes up next.